I'm sorry. I had it on mute. I apologize. I already read the mandatory disclosure. I'm not going to read it again, even though it wasn't recorded. Unfortunately, it doesn't matter. A lot of you attended the three-line session that I gave previously in the multi-speaker event, and I just really didn't have enough time to go over all the components of the system and for you to see the features of the three line. So what I'm going to do is I'm going to break it down for you. I mean, I want you to understand how it works, what you're getting, and why you're going to get some honestly stupendous trades, and also how it does filter bad trades. And I'm going to start with the simplest of indicators, and then I'm going to add the more complex back in. So the first one I want to start with is the pivot indicator. Now everybody, what I was going to do was pull all the indicators out and just have you focus on the one indicator I'm talking about. But I think it's better if I leave everything in. I'm just going to load more days here. And let me show you its value. And let me show you our pivot indicator and give you a good example of what I'm talking about and why it really does have significant value. And why, in addition, why it's different than any other pivot indicator that you're going to see. Now, we can look right here at this area. Now, according to Japanese candlestick dogma, wicks are really not significantly relevant in terms of trading. What really is important are candle bodies. But most pivot indicators simply take the easy way out. And what they do is they trace from the wick high and not from the candle body high. I'm tracing this pivot all the way back to here. And you can see that the pivot is created by the candle body high right here. If it was the wick, it would be up here. But this is really where all the sellers exist. And this is where your risk of taking a trade is greatest. So, number one is the pivot has to be accurate. And it's only going to be accurate if it creates these levels. And here's another example, and I can squeeze the chart. We're just getting these really big pivots. But you can see right here, that's a candle body. It's not a wick. And it's very important that you ignore this price low and take the pivot off the wick. This is where the buyers are sitting, waiting to turn the market when price returns. And you simply can't trade into this pivot. Now, the other thing that's important to note also is that, again, according to Japanese candlestick dogma, and is also pretty much ignored by almost all software that creates pivots, is that what breaks a pivot is only when 2/3 of a candle body closes below it. That's what takes out all the buyers in this pivot. If you simply push a wick through it or 1/3 of a candle body, this pivot is going to continue to trace because these buyers are going to continue to be present. So if the pivot disappears on simply a 1 or 2 tick breach or 1 or 2 pip breach or a 1 or 2 cent breach, it's still there. And if that's the way the indicator operates, it's going to create an illusion for you that the pivot is gone when in fact it is not. So if we take a look right here, you can see that we have this pivot, and we get this so often in the live trading room where we come down to pivots. Now, sometimes pivots break and sometimes pivots don't. And when you get that kind of situation, you have to stand aside. And we call it trading around a pivot. I think this is a good example here on this pivot. Now, price comes up and comes down to the pivot and bounces. Now, I'm not saying that there's necessarily an entry here, but if there was an entry, and there actually was an entry right here, you can see the oscillator signal. You can see the candles haloed in magenta, so that you have the 3 line and the potential continuation, but you're not going to take it into an unbroken pivot. So the price comes back up, you get another oscillator entry right here. And what we do is we call it trading around the pivot. This candle is the pivot breaker. And you'll notice that the pivot continues to trace. Actually, this is the pivot breaker right here. Nope, it's here, I'm sorry. This is where 2/3 of the candle body closes below this pivot. Now, by trading around a pivot, you get a couple of really, you get a couple of nice benefits. One, you don't get stopped out, which is a huge benefit. And price bouncing here is always makes these trades riskier. The other is when you enter here around the pivot and you take the candle body and you take the candle break, which is 2/3 below, you're going to take out these buyers, and this is going to push this trade down with a lot of force. And when we trade candle breaks, we really see price, we really see the speed of price just really rocket through, because this is where we're stopping out all the buyers. And when they buy back, or when they sell their contracts and get stopped out, they push this trade down. So when you get an oscillator entry and it's into a pivot, you simply wait, and if it bounces, you're not in the trade. If it breaks, you're in one tick below the break, and you get the nice move to the downside. Now, based on your risk, you're going to take the trade to the pivot where price bounces. It comes back down and it bounces again. And then finally it breaks the pivot. Now here we don't have an entry because there's no 3 line. The candle's not haloed. So it's a higher risk entry. But you can see how often you're going to get stopped out right here. And again, I just want to emphasize that if we took the pivot, and we moved it down to where the wick is, it would really create a problem for us. And if I'm going to show you right now, I'm just going to put in a line right here. Whoops. Let me put in a horizontal line right here. Now, if the pivot was down here, which is where most pivot indicators operate, you could see that you might take the trade. Whoops. It's getting a lot of, you could see how by moving it all the way down here, you might take this trade right here, short. You're going to get stopped out. You're going to wonder why, because you've got all this space to the pivot. And the reason is it's the candle body, it's not the wick. So you get to avoid these problems by having the correct pivot indicator operational on your charts. Now I'll answer all your questions at the end. I gotta leave right around 10 after 2, so I don't want to get caught up a lot in these smaller things. but the pivot indicator is really critical. The other is that I wanted to go over are our 50 and our 15. Now, if you trade, this system will work on any type of candle. It'll work on a time candle, a tick candle. It'll work on range. It doesn't matter. But if you trade Renko, and in fact, no matter what you trade, these are going to be better areas of support and resistance. This is a special 50, and this is a special 15. This is, and we made these. I don't know if you're ever going to, if you're going to see these anywhere. This is a 50 EMA of a 50 EMA. And what it does is it provides it with a lot, with smoothness, but speed. And in the last webinar, I overlaid the, oops, gotta put it here, what the faster moving average is, and that is a 15 EMA of a 15 EMA. And this is what's called, an optimized workspace. We just don't pull indicators off of anything and leave them standard if we feel we can make them better and they can give us better trading opportunities. It's one of the things that we try to do. So this 50 EMA of a 50 EMA and 15 EMA of a 15 EMA are much better areas of support and resistance, and they track this price, which is really has geometric movement. Because once you get into a trend on the E-mini, every 2 ticks you get a new candle body. Every 2 ticks. That's fast movement. If you're trading a 5 range, it takes 5 ticks. If you're trading a 2-minute, obviously that's a much slower chart. This is fast geometric movement, and these moving averages track that speed. Now, if we look, I want to look at background bias, because that's a special that we've added, and we don't normally do that. And it really provides you with a significant advantage. The thing about background bias is it's going to cost you some winners, but it's going to really effectively prevent you from taking losers. And you see again right here, just because I'm staring you right in the face, here's your pivot, here's your entry. It's a valid entry right into the pivot. It bounces. Here's your next entry, and you trade around and down. So trading around the pivot is really, really important. Now, background bias provides you with a tremendous advantage. Alexander Elder is the first person that I'm aware of. He wrote his book in 1997, and what he described was the triple screen method of trading. I mean, he wanted everything to align on 3 time frames in order for him to take a trade. And I haven't been able to contact him lately, and I don't know if he's healthy and well. I hope he is. He's well into his 80s, and he was a brilliant man, because he made that triple screen method long before there was any charting platforms like this, or E-Trade or Thinkorswim. Back in 1997, everything was done very, very crudely, and mostly was done on end-of-day data. But he proposed that any entry that didn't have an alignment on 3 time frames was extremely risky. And he created, quote, the triple screen method. And we've really taken that to heart. Now, this background color does not look at price on your trading chart at all. Anything that looks at price on your trading chart is only going to make things worse for you. I mean, if price on the trading chart goes up and the indicator is simply assessing this rise in price, it's going to rise. I mean, it's not going to give you any predictive information as to what's going to happen out into the future. And that's the only thing you're interested in. You want to know what price is going to do on the right edge, not where it's been going up. So most of the background bias you see, it turns green simply because price rises. The same thing with most of the paint bars. They'll turn green or blue or whatever when price rises. You know, maybe it's a MACD crossover or whatever they're tracking, only they're just telling you what you already know. What our background bias does is it looks at the alignment of the two higher time frames, completely ignoring price on your trading chart. So we've got 3 up colors and 3 down colors. And when price is aligned on the 2 higher, for Renko, it's a 4 and a 6 Renko. If you're trading time and you're trading a 3-minute, multiply that by 3, you get a 9. Multiply the 9 by 3, you get a 27. So we're looking at a 9-minute and 27-minute. If you're trading a tick chart at a 377, you go to the 2 higher fib numbers. You're trading a 5 range, you're going to go to an 8 range and a 13 range. The key is you're not going to be using this background bias in any way to look at price on your trading chart. It's going to tell you where price is going to go because its assessment is based on what your 2 higher time frames are doing. Now, when your 2 higher time frames are in chop, what is most likely to happen on your chart, on your trading chart? Well, they're likely to chop. And I can show you some great examples of that. Like right here. Right here, you have no alignment to the upside or to the downside on your 2 higher time frames. Now, if you take a trade in here, and there just happens to not be an entry anyway, but if you try to trade when you've got clear color and you don't have an alignment of your 2 higher time frames, you're trading in chop. And the whole point is to make sure you trade in a trending market. Now, occasionally it's going to cost you a winner, but it's going to allow you to avoid 1 ton of losers. And I'll tell you, I'm right here, I never trade when there's no background bias because it tells me my higher time frames are moving in either opposite directions or they're just not aligned. Same thing here. So the only thing a piece of software can do is define the risk associated with a trading entry. And this really, really accurately defines risk. To trade when there's no background bias is exceedingly dangerous. Now, see this move right up here? When background bias goes dark green, it means you've got an alignment to the upside of your 2 higher time frames, and price just shoots up. Now, each color has different meaning, and I want to go over that really briefly with you because I want to show you the best color, up color, and the best down color. Again, right here, what happens when you go green? It goes up. And remember, this assessment is not looking at price on your trading chart at all. Here, you don't get much of an up move because it's tiny. And here's again, the only thing you're looking for on this up move is an entry. I want an entry. I want to go long because price is moving up. When you have that triple screen assessment, it's moving up on the 2 higher time frames. It's dragging price up on your trading chart. Now, we created 3 different types of uptrends because not every uptrend has the same power. Again, to better allow you to define risk. So I'm going to show you on paint real quickly what those different colors stand for. And I'm going to put the paint here, but I'm going to move it over so you can also see the chart. So let's take a look at the 3 up colors right here. You get all 3 up colors. Now, let's go take this to green. When the 50 is moving up and the 15 is moving up, you're in an uptrend. But the 15 has not crossed the 50 yet. That is looking at this cyan color. Now that's a riskier long trade. You've got the 50 up and you've got the 15 up. Price must be here. So it's not only looking at trend, it's looking at market structure for you. It's telling you that price is above the 15, above the 50. The 50 is heading long, but the 15 hasn't crossed the 50 yet. And that's your cyan color. And remember that it could always punk out on you and head right back down. So you have to be careful. It's a little bit riskier to trade on cyan, but it's still a good color to trade because you're really in a strong trend. The other thing that you can't know, which is unfortunate, but there's no way for us to be able to create an indicator to tell you, is this. The 15 may be all the way down here and heading up, or it may be all the way up here, just about to cross the 50. Obviously, this is a better trade to take than that, but you just can't know that by looking at this assessment. Now, you can in retrospect, because you can see that as price moved up, this cyan evolved into green fairly rapidly, telling you that as price moved up, the 15 crossed the 50 to the upside fairly quickly. That's your dark green. That's your sweet spot to trade long, without a doubt. 50's up, 15's up, 15's crossed the 50, price is above both, best time to go long. Now, eventually, the 15 is going to go flat. Now, again, price still has to be above them both, but now you've lost momentum. You still can't trade short because you're sitting, you have to break a lot of support, and that's this light blue. That's not a great color to trade because you've lost a lot of momentum. But at least you know the alignment, and you know that you're going to have a lot of problems if you try to trade short. So that defines the 3 long colors. The 3 short colors are exactly the same. This bisque color is when you've got the 50 heading down and the 15 heading down, but it hasn't crossed the 50 yet. But it's a strongly trending market. And you see what happens as price continues to fall. The bisque evolves into the dark pink. And the dark pink is that sweet color to trade. The 15 crosses the 50 to the downside. Price, by definition, has to be below them both. And that's your best color to trade short. And then just like with the up move, eventually that 15 is going to flatten out, come straight. I put in a circle instead of a line, but when it does, it goes light pink. And you still can trade short, but it's a little bit riskier to trade short. So now you know the 3 colors associated with an up move and the 3 associated with a down move. Now, I don't expect you to necessarily memorize them, but if you come aboard, I trade this system in the live trading room every morning. This morning I could not make it because I'm a single dad and I'm raising a kid, and I had an appointment this morning to meet with a teacher, and unfortunately I couldn't make it back in time because she was late. But I'm almost always in the room in the morning, and we start trading now at 5 minutes to 9 to try to capture any big moves accrue prior to the market open. But now we define the down color and the up color. So you in your head can really make a very accurate assessment of risk. And if you only want to take the most conservative trades on the chart, and there's nothing wrong with that. Everybody has different risk tolerance. You're going to trade a signal long on green, and you're going to trade a signal short on pink. You got to get an entry, obviously, but I'm just talking about your bias in terms of direction. And here's your short. Now, it's not really right there. I mean, your sweet spot is right here. Question it, all it is getting an entry. That's all it requires. Now, these are the two indicators that we normally do not provide, the pivots and the background bias, but we are in this particular offer. Now, I am not going to go back and talk about how the metrics of these three lines are generated, except to remind you that the first line is momentum. The second line is stochastic. And the third line is order flow. Now, I choose to make this invisible because I don't want to see it. And I just use the candle halos to tell me what direction I need to trade. When I get that blue candle halo, I'm long. If I get an entry, I'm going to go long. If I get this magenta candle halo, I'm going to go short. But you can change that to anything you like. See, I changed this outline down to magenta, outline up color to blue, and you can make that thickness going to the data series as thick as you want just by going to candle outline in the wick. I have 3 and 3, so that's how thick and the color that you're going to get. You can change it to anything you want. Let me tell you why it's best to read the candle halos and not read the 3-line. Because the 3-line assessment, remember, I told you is more complicated than it looks. Now, if you look here, let me find a really good example of it. If you look right here, you're getting a 3-line assessment of red, 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 even though that first line is yellow. And the reason that is because here the MACD line is accelerating towards the signal line, but it hasn't done a MACD crossover yet. We wanted to include both of those assessments in this 3-line. Now, you're not going to get red until the crossover occurs, but we don't care about the crossover. All we care about is whether the MACD line is accelerating away from the signal line or towards the signal line. Here, it's accelerating towards the signal line. So the candle halo is magenta, even though this line yet has not gone red. To give you the ability to say, okay, I only want to trade short when there's a MACD crossover. Whoops, I just belted out 3-line. Where did I put it here? Hold on a minute. I just deleted it. I'll have to put it back. Sorry about that. I don't know how that happened. Let me put the 3-line right back in. So it gives you the ability, if you want to take a short trade only on the crossover. Although, based on our assessment, the crossover does not matter. So here's the 3-line. And I just have to make sure that it's in panel 2. And the oscillator is in panel 3. All right, I just got to do this. I'm sorry. Now I got to put the oscillator in panel 3, and we'll be good. I don't know how that happens. Now, the only other thing I'm going to do is, normally I put my 3-line invisible, but I want to make it visible for everybody here. And to make it visible, you take the transparent out. You can put any color in here you like. Does not matter. And there's a 3-line back. So right here is where we were. And no, it couldn't have been here. It's right here. So if you want to just trade the MACD crossover, you're not going to take the short until here. If you want to trade, what we do is simply the fact that the MACD line is accelerating back to the signal line. You get the candle halo. In addition, on the stochastic line, we have programmed in stochastic divergence. Now, I ignore it when it happens, but we wanted to show it for those traders that simply feel like it's an important thing to monitor. Now, I think stochastic divergence is really a mistake to look at, but if traders want to look at it, it's fine with me. And here's a great example of stochastic divergence, right in here. Now, price is going straight up. And right here, these 2 candle halos, you lose. And that's because you got divergence here on the stochastic line. It just so happens you also lost order flow for one reason or another. Those are the delta moving averages. But that's stochastic divergence. It happens again right here. It's one of the 2 higher time frames. And you get stochastic divergence again here. So the best thing to do is just look at the candle halo and make your assessment of the trade based on the halo color that you pick, of the thickness that you pick. Now, the other rule that we have, and it's really very simple, is that we only go long above the 50. We can't go short, and we only go short below the 50. Because we believe that when price is above the 50, the bulls are in control, so we only take long trades. And when price is below the 50, we only take short trades. And that's going to save you a big headache. And that is, don't counter trend trade. So I'm going to make that bigger. And I'll make that a little bit bigger. And now we're going to start getting down to entries. Let me talk about the oscillator a little bit. And I'm going to go into a little bit of the nuance that we use in the trading room in terms of getting an entry. Now, let me just hit F5 and bring back the background bias. Now, there's our background. Now, again, you can see the power of the pivots right here. I'm not going to mention it again, but you can see right here. Here's a long move, rejection. Long move, rejection. And you can see where it's being rejected, right off the pivot of the previous candle body. Then you finally get a pivot breaker. And the pivot breaker is right here. And up you go. It's a small move, but that's the only trade that goes anywhere, is once the pivot's broken. Now, remember, and also this trade is taking place at 1 o'clock in the morning, so no one's going to be trading anyway. So let's take a look at the oscillator. Now, this is really a standard oscillator, but what we've done, it's actually a standard stochastic. What we've done is we've simply taken the stochastic formula, which is X, and raised it to the second power. I can't type, so it's X to the second power, and that is the oscillator. Because we want the oscillator to move fast, to be able to track price quickly. Now, every time Remember, we're not looking for divergence. If we want to trade divergence, we're going to get beaten up. And I talk about this a lot when I give a webinar just on oscillator metrics and how to trade oscillators. I think very few traders understand how to trade oscillators, whether it's stochastic, RSI, Williams K, Williams R. If you look for divergent signals in a market that is pretty much dominated by institutional money, you're going to get really beaten up. What we're looking for is to trade with the trend and track the direction of institutional money. So every time you get across of the oscillator line, the cyan of this is the oscillator line where I have the purple dots. And you can change the color of the dots, change the thickness. All of this is modifiable. You're going to get an up signal right here. And every time you cross it to the downside, you're going to get a down signal right here. Now, obviously, we ignore any down signal above the 50 and pay attention to the up signals only. And then when we're trading below the 50, we only look at the down signals. The cross of the oscillator down and the cross of the oscillator down, because we're only going to trade short. Those are the trades that are going to make us money. We're trading with the trend. And we always trade on the side of the 15. If the 15's below the 50, we can only trade short. When the 15's above the 50, we can only trade long. And that's an objective way of saying the same thing. Above the 50 long, below the 50 short. We've got to wait for that 15 to come down. And sometimes it's just not there. You've got to wait till it does. Now, if we look at this move right here, I mean, this is a great example of the kind of moves that you can get on the system. Now, let's just take this whole move up. It's really, really a long move. Now, it's an unusually long move, obviously. This is not what you're normally used to. So this is if you can ride this all the way up, you would have a tremendous move. But let's see the first place that we can get in. Now, here's your entry right here. Candles haloed in blue. Remember, you've got the entry, but you can't trade into the pivot. So you simply take the entry that breaks it, which is right here. And this is a very, very nice trade. Now, if you trade the way I do, you're gonna exit the trade at your targets. This is 14 ticks. For us, it's a full winner, and you're out of the trade. Now you need another long signal. You get it here. Now, not only do you not have the 3 line, you're trading into a pivot. So this is not an acceptable entry for 2 reasons, but it doesn't matter. You just wait for the pivot breaker and you have the 3 line. That's your entry candle. This is your okay to trade long on the oscillator signal. Now you just look for an appropriate entry. And here it is. And up you go again. Now this is potentially a full winner. Now look what happens here when you create a pivot and you take this long trade. A loser comes right off the pivot and you just walk right into a loser. That's why we don't trade into these. And this just saved us taking a losing trade, because this is a permissible long trade with green background bias with order flow, stochastic, and momentum in our favor. And boom, it's the pivot and just goes right back into our face. Here, we just don't get an entry because for 5 candles, we do not have the 3 line with us. So it's a trade we have to step aside on. which is okay. Remember, I told you that sometimes we're going to have to sidestep winners because they just don't adhere to our trading rules. And here's our next trade. Kaboom. That's our entry. Here's permission. You get permission here, right into a pivot and a loser. Here, we trade around the pivot, entries here, and up you go for another full winner. Now, if you're trading these three entries, you're done. Now, they occurred very, very early in the morning. But I just wanted to give you an idea of how we trade. You look for the oscillator entry, the appropriate background bias, and then take the first acceptable entry you can. Now, if the first acceptable entry is 9 ticks up or 9 candles up, the trade is too mature. But this is just right at the beginning of the move. You get this really beautiful entry. This I would take any day. Once you're in, you're out on your automated trade management strategy. We take a contract off at 5, at 8, and a contract off at 12. This one went 21 ticks, 5.25 points. Now here's a long entry right here. It's not permissible. This is a little riskier on the pivot break because the trade has matured somewhat. So this is a little bit of a gray zone. You don't have the green background, you have the blue. And remember, the blue I told you is where the foul. So this is an entry associated with a little bit more risk. But I would have taken that trade again for a nice winner. And look what happens when you hit the pivot. How many losers has this pivot saved? Right here and bounce. And you'll notice you got price sticking above it, but the pivot continues to trace because 2/3 of this candle body did not break it. Now here's a long trade, no entry because you have no 3 line. Here's a long trade, you can't take it. You have to be above the 15. Can't trade into resistance here. And here you just don't get a trade. There's no way you can get this. Here's your pivot breaker, you don't have the 3 line. And we can continue to do this ad infinitum, except that I'm telling you, these things will continue to work. We'll go back a little bit, and I'll just show you one more setup. No entry, right there. No 3 line. Now here's a loser. We finally found one, right here. Goes nowhere. And I think it's good to see a loser for everyone to know that you 100% winners. No system possibly can. This censors a winner. There's a loser, but then it reaffirms this winner right here. And here is a great trade short. I mean, you're just right in this trade. There's no pivot below. I call this free and clear. And this trade goes 5.25 points. That's a really gorgeous trade. And it's handed to you on a platter. Pink, you've got background bias. It's pink. It's not your darkest, but it's there. Now we're off the end of the chart. And let me show you one other instrument real quickly, then I'll take any questions you have. Now you're going to get the same entries on any instrument. It does not matter what you trade. And the same rules apply to stocks, futures, and Forex. This is a terrific system for Forex. And it's really excellent for stocks. Now the entry is 5210 on crude. And let's take a look at crude. Now look at that trade right here. I mean, this is at 9:01 in the morning. This happened this morning. I wasn't here. When I looked at that, I wanted to cry. Look at that trade. Now, the thing about a pivot is, if you've hit there's a lot of different ways you can play a pivot. If you're in the trade and you're already well through your first target, you can do one of two things. You can tighten your stop. This went 50 ticks on a perfect entry, oscillator, 3-line, below the 15, tons of space to the pivot. When you get to the pivot, you can either tighten your stop or you can close the trade, making the assessment that you're going to get a bounce. There is no right or wrong way to do this. The other thing that you can do is hang on. You've already locked in profit. The trailing stop is operational. It's trailing the trade. And if you get a pivot break, then you get a monster win. And so there's no right way or no wrong way to trade it. It all depends on your risk tolerance. The most conservative is close the trade. The semi-conservative is tighten your stop. And giving yourself the most risk is just, to let the trade roll. And once you've gotten your first target and you've locked in your money, you're good to go. So it doesn't matter how you play this pivot. It's totally up to you. Now here, I mean, I can't, honest to God, I cannot tell you how many trades are saved on these pivots. There's no 3-line here, and bang, a loser. Now there's no 3-line here. It would have made some money, but there's just no entry here. And I would not have taken this trade long looking into this pivot. I want a free and clear trade. Here is an entry, and that's going to make our first target. And crude is by far and away not an easy instrument. 7 ticks is our first. There's your entry. Look at this trade right here. Now you have to endure an up candle here. But this is a really pretty move down. So now unfortunately, here's the trade long, but you can't take it into the pivot. There's your pivot breaker right here. And there's your winner. Now, I point out a million winners. Now, we have no background bias, and we're not trading. Just going to watch. And you see what happens here? Here's a long trade on a down 3-line. Look how far that one goes. Nowhere. Here's an uptrade without the 3-line. It does win. But you'd much rather avoid a loser than get a winner. By far and away, the successful day traders are the ones that avoid losers and take low risk entries to get winners. And I'm not going to trade anything without background bias. And there's your trade. Unfortunately here, your pivot breaker doesn't have the 3-line. Here, your pivot breaker does, and you get a winner. It's a low risk entry. That's all that matters. And I've only shown you one valid loser so far. There's your trade. There's the winner. There's your trade, and you're right in. And there's another winner. So I hope you can see the power of the system. The additional indicators that we've added, the background bias, and the pivots have really made the system extremely powerful. You come into the room, you're going to be there a month. You're going to see me trade around the pivots. I'm never going to trade. And remember, I always look upon a pivot as this way. It's not just a line, it's an area. So if I've got 2 or 3 ticks or pips or cents separating the pivot from my entry, I'm not going to take the trade because I know it's not just one line. That's also the reason the Japanese said you need a 2/3 candle break above in order to break the pivot. They are acknowledging the fact that this is not just a line, it's an area. And you want to break the area with that 2/3 candle close above. That's what truly takes the pivot out and gets you the winner and makes it safe. Now, I just want to point out one other thing. Do you see this entry right here? That's a pivot breaker. And you can enter on that trade. But look at the 3 line. The 3 line is down. So you see how many safeguards you have trying to protect you from taking a bad trade? Now, it's not going to work 100% of the time. Nothing is. But it's going to work 80% of the time or better. Now, I went through both the E-mini and crude oil really meticulously. If I saw a loser, I would show it to you. There was only one valid loser I could show you. And this is a perfect entry on a pivot breaker where the 3 line is straight down. And look what happens to price. It drops. This is where you get that lead of the 3 line ahead of price. It heralded this roll to the downside, so there's no way you're taking that trade long. And this one goes nowhere. It takes you in, blows you right out for a full loser. So let me again show you the offer, and then I'll ask any questions that you've got. And it's normally $19.99. The whole system with all the additions is $6.99. And you get free upgrades anytime that we make it better, and we're always trying to do that. You get them no charge. You come into the room with me for a month. The 10 module educational training session is really good, and then you get 450 videos here. So you're really going to get to learn the system. And by the time that month is over, even though I trade futures, you're going to be able to trade it on anything, on stocks and on Forex, because the rules are identical. And again, it's time frame independent. You can use it to swing trade any time frame you like. And you get the bias, and you get the pivot indicator. And you can see, I tell you, the pivot indicator is going to save you so many losers. It's incredible how important that is. And the bias, defining risk, when you don't trade, when you have that multi-time frame alignment up or down, is also going to censor your trades. The 3 line is critical. Now we'll send you an email. It's rightlinetrading.com/special offer if you'd like to purchase it. And the offer expires on Monday evening. I'm sorry. I'm losing track of the days. It's Wednesday evening. So let me answer any questions that you have. Okay, got them. Okay. Scott, if just the 15 crossing the 50 is not what turns it green, what turns it green is the slope. It's slope to green. But the slope of the 15 and its position vis-a-vis the 50 are completely different components. I didn't want to really go into it that much, but the optimal trade is when the 15 is above the 50 and the 50 is green. So the 15 just doesn't turn green automatically above the 50. See right here, it slopes down and it's red, then it goes yellow, then green, then yellow. The best trade is when you have momentum in your direction on your chart, 50's up and the 15's up. Now on a regular EMA, these 2 candles would knock this out and turn this yellow or red. On these charts, the 15 stays green. A pivot, Han, is where price, if price turns once at an area, like you see right here, price came up and then turned down here on a candle body. So what happened was buyers pushed it to here, and then sellers took over right here and pushed price down. They turned price. So if price turns once here, you have to assume it may turn again because sellers are sort of laying in wait. Now, there are all kinds of sophisticated indicators, volume ladder, all this. I mean, I'm not going to say nonsense, but all this stuff to try to show you where there are hidden buyers and hidden sellers. Nothing is better than this pivot that sits right at this candle body. And when you try to trade back up into it, Han, those sellers are right there waiting for you, and they push you right back down. The sellers are right there waiting for you. And here they just clobber price down. That's why once the price turns at a specific area, you got to wait for it to break before you can trade long again. And you see buyers tried, failed. Buyers tried, failed, and then sellers just rocketed the market down. That's a pivot. It's a critical area where the market turns and the market changes control from sellers here, now buyers are in control right here. Okay? Okay, Alan. Alan, you would just, you take the trade on the signal, okay? Assuming that there's no pivot and the MAs are appropriate and you have the 3 line. Mark, right now we don't have the 3 line on Sierra. We have most of the software on Sierra. It's going to take a little bit of time. It's the first question I asked Sergio today. Do we have this whole system on Sierra? And we don't. I don't want to mislead you. Now you can trade it on Ninja on a demo version with a free data feed, and eventually we'll move it over for you. But right now we don't. And I want you to know that. Why aren't your bars colored in their body so you can see whether it was an up or down candle? You can do that. I'll show you. Hold on one second. The only reason is what I have, I'll show you here, is I have my candles transparent. That's all. I mean, and that's just my own personal bias. If I want to, I can change my up candle. I like to make it, well, I'll make it aquamarine. So you want to make it a color that's different than the halo. And the down color, you want to make orange. When you do, there's your colors. Okay? You've got your halo and you've got your, well, I did it backwards, I'm sorry. Whoops. But you can fill the candles in. Let me just reverse these. This is orange. And this is pale green. I'll just make it spring green for now. See, there you go. It's just my preference. That's all. And you can change the candle halo to any color you like. I've got to go a little bit quick because I actually have my own doctor's appointment at 2:45. So what generates the pivots, Ernst, is the indicator and the fact that, look, we set the pivot sensitivity at 200. which means we want to catch critical turns. Sorry, it's 150. Critical turns where the market changes hands from buyers to sellers, and the assessment is right here. But remember, a pivot is, I want to get overly complicated, but a pivot is created every time. If you go up here, there's a pivot created here. When you go down here, there's a pivot created here. These are just not critical pivots. The indicator on a sensitivity of 150 is going to tell you when there's a critical change in hands from buyers to sellers. And when, if you take a, right here, you come down, and when you try to take a trade long, be very careful. Wait for the pivot to break before you do. Yes, these are drawn in real time. They never repaint. The red dots, red dashes, and the blue. The only thing that happens to them is if they're broken, they stop tracing, which is appropriate. And you see, once this blue is breached, it stops. That's all. But they're always there if you look back into a retrospective analysis. You can, Han. The only problem is the market's moving so slow. Nothing's going to happen. I mean, this is a live market, and that's a live data feed. And it's just, you see the price just jump. It's just not doing anything. That's all. We have no background color here. And you see right here, there was a winning trade right here. There's your break. There's your move up. Not a big trade. Look at this trade. There's your long continuation trade with no 3-line. Kaboom, loser, no trade. It saved you a winner, saved you a loser right there. Just a few minutes ago. So we can leave it on the right edge. It's just moving very, very slow. Some horizontal lines are, all the horizontal lines are dashed except for the 50. Everything else is dashed. Because the only other horizontal lines are the pivots, or I drew them in myself. There's nothing else. And if I take out all the drawing tools, you'll see that. Okay? Let me keep going here. Matthew, just send us an email. Okay? Les, just give us a call for that. I mean, that's just a problem, and Sergio will fix that for you. What indicator sets the candle borders? It's the 3-line, Han. Remember, if you go into the 3-line, right here, you set the candle halo color yourself. I set my down color as magenta and my up as royal blue. But don't worry about the setup. We're going to do the whole setup for you. Sergio is going to do all the configuring. And then if you want to make a color change or make an adjustment, if you can't do it, we'll help you out with that. I mean, don't worry about candle thickness, halo color. It's all modifiable. Michael, you absolutely can. Just send us an email. No, it's not a momentum system, TJ, because we also have order flow. Order flow is not a momentum-based metric, and you need that to take a trade. Also, to have a multi-time frame alignment is also not momentum-based. That's market structure-based. Now, momentum and stochastic, the MACD, those are two momentum metrics. You're completely correct. But they're calculated in completely separate ways. So they're worth making sure that the momentum assessment of both of these work and they're in your favor. Order flow is not momentum based again, and background color is not momentum based. But we certainly do overall want momentum in our direction. Black, Peter, means there is no three-line alignment. Those are the kind of candles we don't enter on. Down for magenta, up for blue, black means nothing. The three-line is out of whack. One of them, either momentum, stochastic, or order flow, are not aligned. A trade entry will be much more dangerous. And you see this trade right here? This is not a big trade, but that's a great entry because you've got them all aligned and you've got your oscillator entry right here. This is on crude. It's a small trade. And here you don't have the trade with no oscillator signal, but we have an entry here. And this is a little bit more nuanced. I'm going to show you that in the room. They are. Those are the best entries, Michael, on the oscillator entries. No, Michael, the pivots are our linchpin for support and resistance. You got it. Renko, TJ, it's not a candle we invented, but I just don't have the time to go into it in much detail, but it's a specialized kind of candle. It's like Renko, but you can't. Renko does not allow any oscillators to work. You need to have a wick. So it's essentially a modified Renko with a wick. Now, I'll be more than happy to teach you exactly the metrics of the Renko system, but I can't do it today. But it's a great way to get trade entries. For years, I traded range bars, but I've moved to Renko because the entries are better. The only thing that's the same between Renko and range is that the only thing that's required for a new candle is how much the market moves. Time is irrelevant. The number of ticks are irrelevant. You just need market movement to give you a new candle. So it can sit like it is right now forever here because we don't have any market movement. If this was a time-based chart, you'd be getting all those flat candles. This was a range-based, a tick-based system, again, flat candles. You just don't get new candles. And I like that. James, I like Sierra too. And we've got 90% of the system on there. If you want to start on Ninja, we'll move you to Sierra. But it's going to be a little bit of time. You know what, TJ? It all depends upon actually. Actually, let me tell you something. A bounce off of a pivot sometimes has tremendous velocity. Because remember what's sitting in this pivot: sellers, and they're waiting for the buyers to come and challenge them. And when they do, they sometimes rocket price down. It really all depends upon how price is going to behave here and how it's moving. But you can get a real launch off a pivot that just blows you right out of the trade. Thank you so much, Alan. Thank you. No, it's 150, Han. We're going to set that all for you. Don't worry about that. Thank you, Ernst. I appreciate it. No, I'm sorry, Alan. You can't buy my son anymore. I've taken that off the table. The offer does not include one free teenager. He's gotten back into good graces. Yes, it is great on NT8, Keith. And if I had time, I'd bring up NT8. It's beautiful. And we're going to be trading NT8 now in the room. It's up to you whether you want transparent. I mean, you can't set the halos to transparent. You want the halos to reflect the three-line on. We don't have a document on. We just have great videos, real detailed video tutorials, which I think are better than reading a document. You got it. The iceberg order is going off, Michael, and that's exactly correct. It's called Trading for a Living, Mark, by Alexander Elder, and you can get it on Amazon for like $5. It's a great book. You'll find it a little tedious. The first third is about market psychology. The second 2/3 is really out of date because he talks about a lot of indicators we just don't use very often. But he talks about the triple screen method, which is really the takeaway of that book right now. Yes, that's his method. If you buy Trading for a Living, you'll see it in there. Thank you, Michael. I appreciate it. Don't worry, hon. We'll do it for you if you need help. No, TJ. It only right now. It's only on Ninja 7 or 8. Those are the only ones. All right, listen, everyone. I gotta run. I have a doctor's appointment in half an hour, and it's a little bit of a drive. I think it's a wonderful system. I really do. You've seen how many losers it censors, how many winners it confirms. That's really what you need to trade. The pink background, the dark green background, an entry like this. I mean, I call it, this is one you back the truck up to. Thank you, Matthew. I mean, when you got this kind of a trade, man, you're going to fly. And this is what we look for. The goal of a day trader is to avoid risk. It's to treat it like you're going to get an anaphylactic reaction, go into shock, and die. Because in a week, if you take 8 or 9 winning trades and avoid losers, you can make $1,500 to $2,000, depending on the number of contracts you trade. It's just about avoiding losers. And the system makes an assessment of risk. So listen, everyone, have a great afternoon. Rory's here to answer any questions you've got. No matter what you do, I wish you nothing but the best of luck. And I want you guys to make money. I really do. Take care. Have a wonderful afternoon, everyone. Bye-bye. Good luck to you too, TJ. Take care.